Are you self-employed and struggling to get a mortgage or have less than 2 years accounts? Then watch this video. Thank you to Little Doc for this video request. I'll go over some of the basics of obtaining a mortgage while self-employed and discuss the options if you have less than 2 years accounts. But first, let me introduce myself and point out some important information. My name's Dan and I'm a CMAP qualified mortgage and protection advisor. This video is purely for educational purposes only and should not be seen as advice or a recommendation to act, and I must stress, as a mortgage is secured against your home, it could be repossessed if you do not keep up with the mortgage repayments. One of the questions I get asked is it harder to get a mortgage if I'm self-employed? In short, it depends. Things aren't quite as straightforward as placing 3 months' payslips in front of a mortgage lender for them to verify your income. If you're self-employed, it can be more of a challenge to get a mortgage because you'll need to prove you have reliable income. But getting a mortgage when self-employed is certainly not impossible. There are plenty of ways to prove to a mortgage lender that you have reliable income. It's usually just a case of jumping through a few extra hoops, such as providing anywhere between 3 to 12 months bank statements. You may hear from friends who are self-employed and have had a mortgage for several years talk about applying for a self-certification mortgage. These were banned completely in 2014 due to concerns that borrowers were being approved for mortgages they simply could not afford. I'll explain briefly what a self-cert or self-certification mortgage was. It's where you could get approved for a mortgage by writing to a lender stating that you earned a certain amount per year. It was incredibly dangerous and has since been banned for a good reason. This means those who are self-employed now need to apply for a mortgage in the same way as everyone else, by proving your income. So what counts as being self-employed? This varies between lenders. Some will view you as self-employed if you own more than 20 to 25% of a business from which you earn your main income. Others can still class you as employed, but more on that later. You could be a sole trader, company director or contractor. So I guess you're wondering, how do I get a self-employed mortgage? If you're self-employed and you're looking for a mortgage, you will have access to the same range of mortgages as everybody else, and you'll need to pass the lender's affordability tests in the same way as any other borrower. What will I need to provide for a self-employed mortgage? Typically, to prove your income when you apply for a self-employed mortgage, you'll need to provide 2 or more years certified accounts or 2 years tax computations with corresponding tax year overviews. But the good news is there are lenders that will consider if you've only been trading for 1 year. It's worth exploring this option as you aren't penalised for not having 2 years accounts, as lenders who consider this offer competitive rates. Having said that, for a lot of self-employed people, the first year trading is lower than the second, so it may be beneficial to wait if you want to borrow more. Before the pandemic, there was a lender that didn't even require the applicant to be trading for 1 year. They'd go off bank statements with an accountant's projection. But I rang them in research of this video and that has since been pulled. But they have not ruled it out to come back at some point. If you do not have 2 years accounts and worried you'll be declined for a mortgage, there is also the possibility you could be classed as employed. For example, CIS workers are classed as employed by some lenders, and they'll ask you for just 12 months payslips. Other forms of proof of income that can be considered are evidence of upcoming contracts if you're a contractor, and evidence of dividend payments or retained profits if you're a company director. Lenders also prefer self-employed mortgage applicants to provide accounts that have been prepared by a qualified chartered accountant. So as you can see, having just 1 year's accounts doesn't rule you out. If you're able to provide evidence that you've got regular work or providing proof of future commissions may also boost your chances of being approved. Just be aware your choice of mortgages may be more limited with only 1 year's accounts. Having a healthy deposit and a good credit history will also help your chances of securing a mortgage. As well as providing evidence of your income, you will also need to provide proof of ID, such as passport or driving licence, proof of address, such as a council tax bill or utility bill dated within 3 months, 3 to 12 months worth of bank statements. Lenders are going to examine your bank statements to look at how much you spend on bills and other costs to be certain you could afford your mortgage repayments. They're going to be looking at how much you spend on household bills, and commuting costs, childcare, holidays, socialising, hobbies, credit card repayments, loan repayments, car finance agreements, and catalogue accounts. So do self-employed people have to pay higher mortgage rates? No. Next question. All jokes aside, self-employed mortgages aren't more expensive. As long as you're able to supply enough information about your income, you should qualify for the same mortgage deal as someone with a comparable salary in a permanent full-time job. The mortgage rate you get is much more likely to depend on the size of your deposit as well as your credit rating. The bigger the deposit and the higher the credit rating, the better chances you have of securing a better interest rate. On the subject of credit rating, do not forget to check out my video on how to credit search yourself for free here. But make sure you watch this after watching the rest of this video in case you miss out on some valuable information. Something to note is if you struggle to get accepted by a mainstream bank or building society, you may have to apply with a specialist lender that deals with self-employed borrowers, and you may find that rates are higher. How to boost your chances of being approved? There are a number of steps that you can take to increase your chances of being accepted for a mortgage when self-employed, such as aim to get your credit rating higher, correct any mistakes on your credit report, get on the electoral roll. These are all things I go into detail in this video here. Also, save as much as you can for a deposit. Avoid buying certain properties such as flats above commercial premises or old or unusual buildings, as lenders are less willing to lend on these. Look for a mortgage with a specialist lender if you're struggling with the mainstream lenders. And last but not least, speak to a mortgage advisor. Whilst it's not vital to speak to a mortgage advisor, it is something we specialise in and we can make life a lot easier for you. Check out this video here for other reasons to consider using a mortgage advisor. How to find the best mortgage deals for self-employed. The best way to find competitive self-employed mortgage is by carrying out significant research. And I say significant because lenders' criteria vary when it comes to self-employed applicants, and some will lend more than others. If you're not going to speak to a mortgage advisor, then please be careful when filling out the lender's affordability calculators. These are often just to give you a rough idea of how much you can borrow. So proceed cautiously, i.e. don't commit financially to purchasing a property until you've secured a mortgage offer. Also, when comparing deals, make sure you factor in the cost of any fees, as you may find it cheaper to go for a mortgage with a higher interest rate but lower fee. If you found this video helpful, please give it a like. It really does help me out. Also, put in the comments below, are you struggling to apply for a self-employed mortgage? In this video, you'll find out ways to improve your credit score. Please remember, as a mortgage is secured against your home, it could be repossessed if you do not keep up with the payments on the mortgage. Thanks for watching. See you next week.